Okay, good morning and welcome back everyone to our Tuesday morning market outlook session. My name is Tony Zhang. I'm the chief strategist here at Options Play. And let's go ahead and get started and take a look at where markets are currently trading. Now, before we do, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we are going to discuss during today's session. And as always, we're going to start off by taking a look at the major equity indices. We've seen a pretty big turnaround here from the markets from a few weeks ago where things look quite bearish to right now where everything looks quite bullish. We'll take a look at how fixed income markets have responded and the commodity markets have responded. Not a whole lot there, but we have seen a lot of sector rotation here over the past couple of weeks. We've also seen quite a few of the subsectors make some big moves here, and we'll take a look at some of the bullish stocks that are moving and the bearish stocks that are currently moving in the markets today. So we'll start off by taking a look at the S&P 500, which if you look at the longer term chart remains in this very strong uptrend. If we look at moving averages, it's tested these short-term moving averages multiple times. This was one of the biggest tests we've seen in a while, but so far it's held those levels and continued to move higher. And all the moving averages are all sloping in the right direction. We're seeing that on the long-term chart and on the short-term chart. On the short-term chart, we have managed to make a new high in terms of price. Now, there is some negative divergence because we did not make a new high in terms of momentum. There's some signs of exhaustion here. That usually typically refers to more of a small pullback here before we continue to move higher. But keep in mind that this can continue to move higher for quite some time before you see that small correction, and then it continues to move higher here. But overall, we're back to new all-time highs. You know, if you asked me here a few weeks ago, did I think we would see all-time highs this quickly? The answer probably would not have been this quickly, but that's where we currently are in the broader markets. Now, the NASDAQ 100 is surprisingly significantly weaker than the S&P 500. It has failed to make a new high, but it is slowly continuing to grind higher here. If we look at the NASDAQ 100, same thing. If we look at the moving averages, it's tested this moving average multiple times, and now it's back to these levels here again, and we're expecting a continuation higher, at least towards the all-time highs, and we'll see how the market responds to those levels, whether they bounce lower or they start to break out higher here. And then when we look at IWM, the small caps, we remain range bound here in the small caps side of the market. So we haven't seen participation here in the small caps. That is, generally speaking, a little bit concerning that we don't see confirmation of small caps, but relatively speaking, small caps recently has performed well. It just hasn't performed very well against a longer past. But so far over the past couple of weeks, small caps have largely kept pace with the major cap indices. And one other good thing to really look at the current market is that RSP, the equal weight S&P 500 index, made a new high, and momentum actually confirmed that new high. So this really shows us, a few things. One, that there's participation on this rally. We saw a lack of participation on the past few rallies or the past few months. We've talked about how as the market moved higher, RSP, the equal weight S&P 500, barely nudged higher. It actually just mostly traded sideways. And that tells us that it's really just the major market cap names dragging the markets higher. What we're seeing right now is sort of the reverse, and this leads to a healthier market rally. Now, there are still other concerns that we currently see because even though participation is improving, there's not a ton of participation at the moment. So these are some of the things that we have to look for, but the fact that there is participation is fairly healthy for the current market that we are in. So when we take a look at bonds here, this is really where things don't look as healthy, because if we look at the bonds, we've had a pretty big sell-off here from the 152 double top or triple top. We've broken below the 146 support level, and we've tested this level as resistance once and was rejected. And this certainly leads me to believe that bonds are more likely to trade range bound and potentially test the lower end of this range, which is around $140 or so. And that's going to lead to higher yields. That's going to be a bigger headwind for the equity markets. So when we look at the bond markets, it is giving us slightly different signals than what we're getting from the equity markets, which is everything is fine and we're back to all-time highs. Look at the 10-year yield. We're back to 162 basis points, finding a little bit of equilibrium here around this 160, 170 range that we found ourselves in earlier this year. We did obviously have the huge decline in rates, and we're back into that range here. And we really have to keep our eye out here for 175, because if we break out above 175, then interest rates are headed substantially higher towards 2% and potentially even higher. And this is some of the risks that I currently see in the broader markets is, you know, the market's pricing here of inflation, market's pricing of the Fed's policy. As of right now, things seem pretty calm, and the question is whether that continues. When you look at the dollar index has managed to break above this 93.5 level here. It's come back to retest this level as support. So far, that level is holding. The major level that we really have to pay attention to here is 94.5, because if the dollar breaks out above 94.5, that's going to be significantly bullish here for the US dollar. As you can see, this is a level that we have tested twice as a double top and has not managed to break out higher here. And this is going to have ramifications on those of you that trade currencies. This is going to have ramifications for those of you that trade commodities that are priced in US dollars, or even Bitcoin, or emerging markets. There's so many things that are priced in USD, and it's important to know if the USD starts to break out above this 94.5, that's going to have major ramifications on a lot of those things. One of those things is gold, and we continue to see gold remain in this long-term downtrend here. It's been very choppy lately, but we've had very choppy price action, and right now we're near the top end of this, let's just call it a downtrend. We're near the top end of the range here, and my expectation is that as long as the dollar continues to strengthen, we're likely to see gold trade in this very choppy action, potentially sideways here. So this is one thing that I'm paying attention to here when I'm talking about commodities. We do have crude continue to trade higher here, but the one thing I will point out here is the same thing I've pointed out over the past couple of weeks. Crude, as it continues to move higher, we've started to see some negative divergence. Now, that does not mean that I think we're going to get a big pullback here in crude per se, but it does mean that right now, I think the timing perspective, I would prefer to wait for a bit of a pullback towards the 21-day moving average, which is around $80 or so, before looking for further upside, because the trend for crude is clear. We've broken above this major bottoming formation here in terms of crude, and now we're headed back towards at least, I would say, the low 90s and potentially 100s, potentially as high as 110 here to the upside. There's clear upside, but we've had a very strong uptrend from about $70 to $84. You need a period of rest. You need some pullback, a give back, before it can continue moving higher. And I certainly think that give back is potentially coming soon. And then when we look at the sectors, this is really what I'm referring to. You know, when we looked at this about 4 weeks ago, we pretty much saw red across the board. And this is coming from the options play tool. For those of you that have used the options play tool within the watch list, when you put in the sectors, it gives you color-coded sections so that you can see the overall trend of each sector. As you can see from last week to this week, more improvement. We now have 10 out of 11 sectors that have returned back to a bullish trend. It's only communications that has failed to get back into the bullish trend that's still neutral here at the moment. And this is a pretty big departure, a pretty big change from what we've seen here over the past week or so. And more so even over the past 4 weeks. So things have returned back to its very bullish trends. Now, the one thing about when things turn all bullish is that that's also when sometimes you have the opportunities to take profits on your long positions and potentially seek bearish positions if you think if the markets are going to turn around. Now, I don't really have any evidence yet that the markets are going to turn around, but you know, there are some of those signs, like some exhaustion that we're seeing, some markets are overbought. Participation is improving, but it's not quite there yet. But overall, when you look at things on balance, things look fairly strong. And then when we look at the relative rotation, the rotation of the sectors, you see a fair amount of rotation. We continue to see rotation out of financials and energy, staples, and we see some strong rotation into discretionary, into real estate, and into healthcare. Those are the major movers that we've currently seen. We've seen utilities come back a little. We've seen technology attempt to get back into leading, but what we've actually seen here is over the last 4 trading sessions, technology has really failed to gain any momentum or relative strength and is actually starting to turn back a little. So technology not looking very strong. Materials also losing a fair amount of strength here. So between these specific sectors, we're really seeing a fair amount of rotation right now. But healthcare, real estate, and discretionary are the 3 that are strengthening, while staples, communications, financials, energy, and even industrials are moving in the wrong direction here at the moment. So we're actually seeing a fair amount of rotation, which generally speaking, again, is healthy for a market rally. So as long as you continue to see a combination of participation, sector rotation, and just general price action that's constructive, those are going to be beneficial for the equity rally that we're currently in. So taking a look at some of the sectors, XLE, this is still one that we want to pay attention to. Like I said, XLE and crude are a little overextended. I would like to see a bit of a pullback here, at least perhaps to the breakout level around 56 or so, and then look for a continuation higher here. I think that, despite the concerns that we have with respect to energy in terms of climate change, energy stocks, fossil fuel stocks will likely actually continue to benefit in this short-term environment of moving to renewables a little too quickly and not having them be able to support all the demand that we need in terms of electricity, and requiring fossil fuels. And the underinvestment that we've had in fossil fuels over the past few years is starting to play out in the markets right now. We're seeing it in oil, we're seeing it in some of the mining industries as well. So, this is one where, unfortunately, while I'm not a big fan of being long oil or fossil fuels, at the moment, this is really where the performance is, and it's hard to just ignore that. Real estate, this is one of the ones that I wanted to show you that's gaining quite a bit of momentum here, especially in a rising interest rate environment. Real estate is showing quite a bit of strength, which is good for this particular sector. At the very least, I'm looking for this to revisit the all-time highs around $49 or so, and potentially break out above that level. But right now, we're seeing a fair amount of momentum. We're also seeing a fair amount of volume behind this particular move. So real estate breaking out above this $47 level, in my opinion, very constructive for a revisit to all-time highs and potentially even higher. And the one that I really want to point us to is XLK technology. As you can see, technology has failed to even get back to its prior highs. We've seen this in the NASDAQ 100 index over the past 5 trading sessions. While the market has effectively moved straight up, technology has done nothing but move sideways. And this is really kind of concerning to me, that technology losing relative strength. If we see the market start to pull back a little bit, this is really where I expect to see some weakness going forward. And, part of this is because we continue to be in a rising interest rate environment. This is the sector that's most sensitive to that rising interest rate environment. And we're just seeing more and more lack of momentum here from the technology stocks. So as you're positioning here in this particular market for upside, technology at the moment does not seem to be the place to be. And then looking at some of the subsectors, we talked about this last week actually, but I wanted to revisit it because we talked about it last week when it first broke out above this $87 high. This was the double top that formed. We broke out here last week and we came back all the way to test it as support, and now we're accelerating here to the upside. So LIT, the global lithium and battery technology ETF, accelerating higher here. The big move here is largely due to Tesla. They have a fairly sizable position here in Tesla, but as an ETF, it's one of the ones that have a fairly sizable weighting to Tesla and is seeing some strength to the upside. And my expectation is that this will continue to see some further upside. And then if you look at the regional banks, especially on the rising interest rate environment, regional banks breaking out above the 71.5 level here. 71.5 has been a resistance for quite some time. It pulled all the way back to the 55-day, long-term moving average, held that level twice and is now broken out. And this is fairly constructive, in my opinion, for those regional banks to start moving substantially higher here to the upside. especially these regional banks. Most of them trade at fairly relatively cheap valuations, and especially when we look at a higher rising interest rate environment, these are the stocks that are most benefited from the rising interest rate environment. And then taking a look at some of the opportunities here in this market. So the first one I want to take a look at here is Freeport McMoran. As you can see, this was one of our top stocks from this year. A significant pullback here, but finally formed this bottom here around this $30-31 level here. And what we've come back to revisit some of these levels as resistance. This $39 level that we've been testing as resistance for quite some time. That we've been testing as resistance for quite some time, finally starting to see the breakout here to the upside, especially as copper prices continue to rise here. We have this unfilled gap here around $43 or so. That would be my initial target here to the upside for Freeport, and looking for some upside, especially as momentum both on the short and long term have turned positive again. Price action looks constructive, momentum looks constructive, and it looks like we've got a fair amount of volume on these moves here as well. A similar type play, but a very different price action is Alcoa, aluminum producer largely. As you can see, Alcoa very much in a strong uptrend, both on a short-term and long-term chart. And what we have is a pullback here to the 21-day moving average. This is a potential opportunity to look for further upside. This is just simply a different price action, very different, very similar sector, but a pullback here to trend provides the opportunity for some upside. And then we look at some of the semis. If we look at analog devices, recently breaking out above this $178 resistance level. As you can see, if you look at the long-term trend, very much steady uptrend here, recently breaking out to all-time highs on some substantial volume, looking for some continuation. We've seen a lot of these stocks continue to see some strength here, including Microsoft. Now, I know Microsoft is in XLK, which is one of the sectors that we're not as particularly strong on. But the one thing I will point out is that Microsoft outperforms that sector. As you can see, it's made a new high relative to itself, or a new all-time high relative to a couple of months ago. It has held that breakout level, which is 305 or so, as support. So I do see some potential upside here for Microsoft as a bit of a divergence from its sector, outperforming its sector. We usually like to only look at long stocks that are outperforming its sector and short stocks that are underperforming its sector. And Microsoft certainly one of the few mega cap technology names that are outperforming its sector. When we look at the real estate sector, this is one of the sectors that I was referring to before that looks very strong. And some of the strongest names in this is public storage. Public storage recently about to retest its all-time highs around 332 or so. This is one that we're looking for a potential breakout here to the upside. Public storage, as you can see on the long-term chart, big move from 240 or so all the way up to 330. Pulled back to the below the 300 level and has now come back to retest that 330 level here or so. So it hasn't broken out yet. So this is one that I think I would watch and wait for the breakout before looking for that upside, because you could very well get to that level, have some back and fill, and then retest that level before it breaks out. So this is one that I think it's one worth putting on your watch list and seeing if it breaks out soon, or if it pauses a little bit, pulls back, then breaks out to a new all-time high. Another semiconductor stock that I think is worth paying attention to is Broadcom. We've seen Apple pull back their production expectations for 2021. Our expectation is that that will likely continue into 2022, but some of the chip suppliers here to Apple have broken out to new all-time highs. Broadcom, one of the major suppliers to Apple's 5G chips, breaking out above this 510 level. I've been looking at Broadcom for quite some time here, and the key level has always been the 490 level. This was the all-time highs that we had seen for multiple months, and when we finally broke out above it, it did come back below it, but held this upward channel, and now has finally started to accelerate here to the upside. So if you caught it initially here, you might have gotten stopped out potentially, but now I think there's another chance, a more clean chance to get back into Broadcom for some significant upside, especially if you look at the long-term chart here. you've got a very long consolidation range after what has been a very big rally. So when you have this long consolidation range and now you get the acceleration here to the upside, I think the upside here is fairly significant. And I think we're in the early days of what it looks like a very big move here to the upside in Broadcom. Another stock that I want to pay attention to here is Nike. Nike had a very big fall from grace over the past couple of months as it topped out around this 174 level, pulled all the way back to about 144 or so, and has now reached back up above this 160 level here. And it's doing so on fairly significant volume. So this is one where I think, especially going into holidays, and you look at some of the retailers that are doing their best to navigate the supply chain issues, Nike is certainly one of the big names that will likely navigate it a little better than some of the smaller names. And this is one that I think will see some pretty strong sales going into the end of the year, Nike, towards that 174 level here as well. So Nike, while, one of the stocks that I think, has been one of the strongest consumer-driven stocks, given this big pullback here and now the reversal, this is the opportunity to look for further upside back into that 174 level. TECK Resources on the energy side of things. This is one of the stocks that is outperforming its sector. So especially as we talk about energy stocks, we want to look for energy stocks that are outperforming its sector. Strong uptrend here, recently broke out above this $27 level, which is this level here. The fact that it broke out, came back to retest this level as support and held it, and is now continuing to move higher. This is the opportunity that I see for TECK Resources, in the energy space for those of you looking for some energy names to play for upside at the moment. And lastly, in the technology space, there are still some opportunities in the technology space, especially in the cloud computing space. We currently see ServiceNow reaching a new all-time high and recently breaking out above that all-time high has the potential of moving higher here. The one thing I will warn investors, there is some negative divergence here, so this is concerning to me. I would really like to see a little bit of a pullback here towards that 660, 650 level here before looking for a continuation higher here. But this is one worth paying attention and putting on your watch list. You have some divergence here on both the short-term and long-term charts. So I would look for, again, a bit of a pullback here to look for a continuation. But this is one that outperforms its sector, outperforms its industry, and is recently breaking out to new all-time highs and is worth paying attention to for your portfolio. So with that, that covers what I wanted to share with you here today. I hope that this was helpful in giving you a better understanding of how we're viewing the markets. Like I said, quite a few things have shifted here in the equity markets. Things have shifted quickly. We're very much back into a very bullish market here. All the sectors look fairly strong here, so that's why we have looked mostly at some bullish opportunities in this particular market. With that, thank you so much. I hope you guys have a great trading day, and I'll see you guys here next week on our next Tuesday morning market outlook session. Have a great day.